Alright, folks, welcome to this week's Forex commentary and market review. So here's the dollar index on the weekly time frame, and last week I said I was bullish on DXY because apparently we had an obvious draw on liquidity, which is this gap, and as well as this sell side imbalance, buy side inefficiency. And I talked about reasons on the sell side. I mean, we saw the market take out sell side from previous low here and take out this sell side, and now takes out this sell side again. And I said this is classic pattern, okay, for reversal, right? And even though we've talked about all of the things going on the high time frame, I mean, just to reiterate for those folks that are actually not following every commentary I post. Initially at the start of the year, I was thinking DXY was going to return into the bearish yellow block, and for a bearish delivery into sell side here. That's a long-term analysis anyways, and the market managed to take out sell side first and trade into this bullish yellow block, right? Ideally, I'm bearish on dollar index for 2026, but market has a key of levels. Things has to happen. How they are going to trade matters too, right? And so I'm thinking that the run below this low, because this was the actual draw at the start of the year, it's a torso. So I'm betting on reasons that we could see dollar index expand, and one of those things I'm seeing currently in price action is the run below this low and the run below this low. So there's a true drive, and I'm thinking February could actually expand. But of course, I could still be wrong. So that's the reason why I'm taking it a week at a time. Currently, we have a swing low here, and market has completely rebalanced inefficiency. So you understand why these key levels are there. Okay, it's not random levels and stuff. You can see where dollar index capped its weekly high, even though I guarantee that this price action is an extremely difficult price action, especially in euro, because last week's range was very small. We had a small range last week, so whoever is trading euro last week, it would be so difficult not to take a loss trading euro. Personally, I took a loss on euro on Friday because I'm going to go through euro as a price action soon, so you'd see it, and there's something to learn from it, and there isn't really much I want to be learning from it. Could I have avoided a loss? Yes, but is the trade worth taking? Also yes. So it's something that you just have to fuck around and find out. I hope this doesn't affect my YouTube video. Anyways, this is where the weekly high was capped. And that's the reason why I always say something. I said the weekly ranges are capped, and how these ranges are capped is via key levels, okay? It's either you're trading above buy side or sell side, above an old high, below an old low, or completely rebalancing an inefficiency on these time frames. So that's how you can anticipate the high of the week and stuff. Because why you need to understand that the weekly range is capped is because for reasons, for me, like Friday, okay? And besides, say, Friday, just general market participation, not ideally Friday, because we haven't seen much expansion on dollar index, and that's the only reason why I decided to take the trade. Say we saw expansion on foreign currencies like in the yen, there will be absolutely no reason for me to probably engage dollar index on Friday. So if you have a situation where the market's expanded midweek, say Tuesday, Wednesday, Thursday, good expansion, and we have market mid objective like this on Friday, absolutely low probability on Friday. You simply cannot put into any consideration for those kinds of setups because you're very, very likely to be wrong. So it's you waiting on the sideline after the market meets objective, right? So this week I'm still bullish on DXY, courtesy of all of the things I pointed out, and the fact that we have low resistance liquidity run here. This is high res after taking sell side here. this is a weekly bullish swing low. Okay, we have a swing low forming on the weekly time frame, and I think the market has interest for buy side here. Okay, someone asked, oh, Sarah, why do you think the market has interest here? Well, since I think we are bullish and there's some sort of head and shoulder pattern here. You can see the left shoulder here, the head and the right shoulder. I think they're going to draw into buy side liquidity here. So this is a draw on, on the weekly time frame. Ideally, we want to see them invert this level, which is very, very important because it shows institutional order flow and sponsorship. Okay, market inverting this level, but primarily now we want to see it on daily time frame because if we wait for the whole week, definitely we're not gonna trade. Okay, so we want to see that inversion happen on the daily chart, and of course, if the inversion happens, we want a retest of the inversion. If there's no retest, probably we can size down to lower time frame, some auto block there on the 4 hour time frame and stuff. But primarily now, when you look at the daily chart on dollar index, you'd see market made objective and spent, Friday returning back into the range. So last week was essentially consolidation. Okay, you cannot interpret this as any useful move. Okay, and these ranges are extremely small, especially if you make reference to Euro USD, and I think that was a bit of a mistake. But anyways, we had very good delivery other days, like the bullish order block I talked about in the commentary last week, and said we're going to aim for buy side here. And when we see markets invert this level here, this volume balance, a retest of the volume balance sends us into this level. So this, you can see how the markets were very, very picky about objectives. We want to see them completely rebalance the inefficiency because we're bullish. But first, the first objective would be entry into the inefficiency. Secondly, low probability, okay, for a retest into the inversion. Then another entry into the inefficiency, capped the daily high again at the same key level, all right, and then the complete rebalance of this inefficiency. And this was where I misread because of Euro USD anyways. So if you look at it in hindsight, I shouldn't have gone in anyways, but it doesn't matter. I still had a very good week. I think I had 6 setups last week, 5 or 6, and 1 loss. So that's very, very fair. If I keep thinking about losing this trade, I'm not being real. Okay, I'm not being real. I'm not trying to be perfect. I'm just trying to make one very good decision at a time. And sometimes when you've been making very good decisions and you make one funny decision, it's always, you feel stupid, and all of that. But we'll see what happens this week. All right. So I want to talk about daily time frame price action on dollar index. Okay, you can see market respecting the close of the volume balance, right, and takes out Thursday's low inside the daily bullish order block. Okay, and there are 2 ways this can unfold if dollar index decides to be bullish, because I could be wrong and the market continues to sell from here. Okay, but I'm not putting that into any consideration because there is no market structure currently that supports any bearish bias, except if I'm making reference to old market structure. Okay, like this level here is previous market structure, but because I'm bullish, I want to focus on the current candlesticks the markets are printing. Okay, so this is the run below Friday Thursday's low. Friday's candle settled within the range of Thursday, right, into the bullish order block on the daily time frame. So I'm thinking, say there is no validation yet on dollar index for Monday's trading. Friday's close doesn't set up Monday. I don't know, except if the run below this low is very significant, then maybe that will happen. But we can only confirm this after the close of Monday's candle. Okay, so I want to see how Monday trades. I want to see if probably because of Friday causing any retracement, Monday has any willingness to return into Friday's low, or probably the volume imbalance again, possibly, I don't know, or maybe Monday just intends to expand. I don't know, maybe wants to stay in consolidation because currently we are between key levels, okay? And when you're between key levels like this, of this is resistance and this is support, um, you know, markets are likely to go into consolidation, okay? And and that's what we're currently seeing, okay? One may easily think that the bullish candle closure into this level could send more continuation, thinking dollar index is willing to expand, but the market still respects these levels. So the thing is, instead of being flexible, I think it's always fun, or it's always better to be rigid with the way you interpret markets and all of these things, because candlesticks sometimes themselves can be very misleading. Okay, market structure absolutely misleading. Okay, so we need to see how Monday closes and how Monday trades. Preferably, I said on the weekly time frame, what validates long is if we can get a closure above this imbalance, because for now we're still stuck between key levels. Okay, we need to see a breakthrough, because you can see the level causing resistance currently, right? We need to see a breakthrough resistance, and then we can engage and aim for buy side liquidity. Okay. So this is Euro USD. Last week I talked about the fact that we wanted to see, sorry, we wanted to see continuation in Euro into sell side here. I mean long-term buys, right? And we have other objective like this daily bullish order block and before sell side here. So this was Monday's trading, the only reasonable trading last week on Euro, and market inverted this gap. They made a return into this gap, which still makes sense, right? And to make a continuation, markets were in consolidation. Okay, you can see the small range day on Wednesday, very small range. The body of the candle is like 9 pips, which is very interesting. The whole range is 47 pips. I am definitely not going to catch the high, except if you are interested in probably going short at this gap and resizing on lower time frame and all of that stress, but that's not how I like to trade. Okay, so markets traded below this daily bearish shadow block here and seemed like okay, they're gonna make a continuation from here, but they didn't. The markets went into consolidation. So although I understand because they met objective on the high time frame, which makes sense, but also we've had small ranges and validation. So now what I'm thinking on Euro is we've ran above previous this high. Okay, we could see them take out the swing high here. Okay, this is a swing high, this is previous this high. But then again, I think if we have markets just open up and sell off on Euro, which can make sense because a run above previous high, if we are bearish, is a torso, and the market settling within this range is probably maybe confirming, but it's not enough. So we're going to see how Monday trades, and everything I said on dollar index is how I would use to interpret Euro USD. Okay, so I'm going to talk about yen a bit and then wrap up the commentary. I would have loved to cover silver and gold, but I want to record another video for my Discord, and I think that's where that's why I'm going to be talking about those things. So at least you understand that there's something I'm reserving for Discord members, and it makes it more premium, right? So I'm thinking the yen are bullish. In fact, the yen are actually bullish, and we have a bullish swing on the weekly time frame. This is further confirming bias on dollar index to be bullish, right? We saw periods when dollar index was like bearish, so you can see how it affected the yen. But seeing heavy strength now looks to me that the yen are very bullish, and the week draw this week. This weekly time frame draw would be the fair value gap, but within the fair value gap we have a balanced price range. So we have a balanced price range on CAD JPY that they could reach for, and within the ranges on the daily time frame, we have a premium daily fair value gap, which is very clean for an objective. On the daily time frame, we've seen markets expand. Okay, met objective at a rejection block, low probability. Okay, you see that now, right? So you can see when markets expand to levels like this, okay, you want to wait because they are likely to return back into the range, go into consolidation, or possibly expand. But because of all of the things that is likely to happen here, you don't want to gamble. You want to sit on the sidelines, right? And when this happens, you can now see it creates a fair value gap, and market return into the gap and continues. So now we have a change in the stating delivery on the daily time frame after trading to a daily discount fair value gap. And want to see if the markets can make a retest of this. Okay, or the daily order block. It doesn't matter actually, because now we have a closing basis. The markets could absolutely open up and expand towards the draw. So so this is what I'm aiming for the coming week. Here that's a little bit of price action. If you check through, we have a run below previous days low, and you can see how the weakness on dollar index is not reflecting on the yen. Okay, it's something you want to note for relative strength analysis and why yen is usually a preference. So I think this CAD, this GJ, okay, also very beautiful price action here. Run into this gap. You can see how this candle closed within this range, confirming this week to be bullish, just as dollar index bullish. And you can see the bullish buys on Monday. You can see Monday bullish closed above this gap. See Tuesday making a retest of this gap. Now, if Tuesday makes a retest as perfect as this of the same gap, how is someone else going to convince you that there is something about something about something? At some point, it gets very ridiculous, because how do you improve on perfection, really? So you can see here the market traded into buy side liquidity here, and you can see we have this high here, another high here, another high. It looks like a true drive, but you can see it sends the markets into discount, and that's what I'm banking on dollar index. At least if dollar index is, oh, I don't know what's going on with my voice. At least if dollar index is bearish, we are supposed to see the markets actually return into a premium first. Okay, and that's how the concept of this trade drive works. If order flow isn't bearish, it can return into discount, but if it's bearish, it can take out all of the lows. But if you study liquidity runs here, you can see how this low takes out sell side here, and this high takes out buy side here, and you can see why the return into discount, this is high resistance, and it found support off of this level. So obviously we are looking for a continuation on GJ, and so we have this high here very close to, and we have this high here for buy side liquidity on GJ. So that's the draw, about probably 200 points or less. 200 points. Oh, 363 points. So that'll be good short-term trade on the yen. So if dollar index is still in consolidation in the early portion of the week, that could still really send prices high here. So so that's what I have for YouTube. I hope you found this one insightful. Until I talk again, be safe.